Good morning, it's Jeffrey Cohen. August 3rd. Hopefully you're having a good day today. We're investment advisors. We're Chicago Quantum, also known as U.S. Advanced Computing Infrastructures Incorporated, Illinois Registered Investment Advisors. I'm an investment advisor representative. I'm Jeffrey Cohen. I'm also the president and owner of the company. And I come every morning and I talk to you about the stock market and about fixed income, commodities, currencies. And I tell you what we're thinking. I try very hard not to tell you about stocks that we own or that we're short. I don't want to get involved in all that, but sometimes I'll let you know as well. So this morning we had an interesting change, a change of pace. We made a small change in the model, and it made a huge change in the answer. So let's tell you what we changed. This is our up run, and it's not the formatting. So we said, what if we were to set the floor of returns on the exchanges to 10%? Because let's be honest, how many people that you know have a 5% expected return in the stock market? Not many. They wouldn't be invested if they were expecting 5% return. So as I thought about it, I've seen a lot of tweets, and they talk about 10%. They talk about historic returns at 10%. Maybe I'll earn 10%. In fact, if you buy an I-Series bond, savings bond, right now up to $10,000, you earn 10%. It's 9.62 guaranteed. So 10%, what would happen? We keep the risk-free rate of return at 2.5%, because let's be honest, if you work hard enough, you can earn 2.5% risk-free. As a retail investor, if you're a money manager, you definitely earn more. In fact, the 10-year treasury is at 2.7, but the 1-month treasury is probably closer to 2.5 by now. So market return goes to 7.5%. And what does that do? Well, let me tell you, it changes everything. Changes everything. So before we get into that, what it changes, let's talk a little bit about some of the inside baseball. So if you get yourself comfortable with a 10% return on stocks starting today, inclusive of dividends, then your expected return to the market with all the stocks that made a profit is 9.96%. So we have an overall beta of slightly less than 1 for companies that made a profit. If we look at our down run, and this includes, the down run includes like foreign stocks that are listed in the U.S. It includes all the dogs and cats, but the only thing you can't do is make a profit to be in our down run. You know, there's 11,000 of the, oh wait, no, they're not. There's 1,912 that make the first cut. In terms of profitable companies, there was 1,912. How many profitable companies made the cut? Was 2,500. So the difference between profitable and not profitable was 2,400 and 1,900. First off, that used to be like 2,500 and 1,000. So a lot more companies, a lot more stocks, and not profitable. So if we look at the 1,500 that passed validation versus 2,000 that passed validation, good round numbers. Well, the beta of the money losing stocks is much higher. So your variance is higher. It's 5.4 times 10 to the negative 4 versus 1.9 times 10 to the negative 4. Those are comparable. So you're roughly speaking 2.5 times, 2.5, yeah. Probably 2 3/4 times the variance. And look at that expected return. It goes way up because your beta is higher. So not only are they more variable, but they're moving more with the market. Money losing stocks flow more with the market. Oh, okay, Jeff, thanks. That's terrific. Thanks for sharing that with me. So what changes is your top 50 stocks are well better than the market. So the market in our model is set to 0 or negative 8.2 times 10 to the negative ninth, which is effectively 0. It's actually not as precise as we've gotten it before, and companies like Silvergate Capital and Coinbase and Nvidia and Mercado Libre and SI Time, these are stocks that if you knew us back in the day, these are the ones that you know, that you love, right? These are the hot items. Trade Desk, the one that sets up the advertisements online for you. SI Time, a small chip company. Advanced Micro Devices, a big chip company. Axcelis, a medium-sized chip company. Synaptics, chip company. Nvidia, chip company. Lattice, chip company. Alpha and Omega Semiconductor, chip company. So I did that for effect there. Carlyle Group shows up as well with Ares Management. So those are pretty risky. Applied Materials, KKR makes the top of the list. Lam Research, chip company. KLA Corp, chip company. Intuit Software. You get the point. You get the point that a tiny change in the model says, go all in. Go crazy. Go for the riskiest, what I would say are the most crazy. And actually, it's funny because our model yesterday picked 35 stocks. So if you wanted to be safe, 35 stocks. Safe. Insurance brokers. Regulated utilities. Remember? McDonald's, Coke, Pepsi, Yum Brands. Now what do you have? Now you have Silvergate Capital, which is a Bitcoin lender. Coinbase, which is Bitcoin. Nvidia, which makes money making the chips for Bitcoin. AOSL, small chip company. EBIX. So basically your best bet today is to go all in on Silvergate Capital, which, just shoot me now, it is so risky. But the model completely changed everything. 33 to 40 stocks, tiny edge. Look at this edge. It's 3.65 times 10 to the negative 3. You're talking about a 10 times edge, rough 8 times edge over yesterday's run. You know, if you're going to do that, you might as well just go absolutely batshit crazy and go with the TNA, which is a triple bull, 3 times shares. I'm not exactly joking, actually. This is awful. This is so risky. And that one has an edge over the down run of 6.4 times 10 to the negative 3. Along with Affirm Holdings and MicroStrategy, and Marathon Digital Holdings comes back as one of the best of the dogs with Riot Blockchain and Block. So, is it time to go back to Bitcoin? Is it time to go back to the crazy stuff? Maybe. If you believe that stocks starting today should return 10%. Now, we can look at some big picture things, right? I mean, this is like the big debate now because we got ourselves all frothy. So let me take a step back. I'm wearing a Chicago Bulls sweatshirt because I'm from Chicago, live in Chicago, work in Chicago, and I'm feeling bullish today with the model run. I also want to point out to you Jeffrey Cohen, North Shore Water Reclamation District, Ward 5 in Highland Park. Running for trustee. It's like a board position. Basically, it pays a tiny amount, but it's a good executive role to help give back to the community. I am Jeffrey Cohen. I am running for office. And so I'm feeling a little optimistic these days. Running for office, make a tweak to the model, and suddenly we're back into Bitcoin, right? And now I look at so first off, I look at the futures, right? They look great. I look at the bonds, and this is interesting. So this happened yesterday. We got a little head fake yesterday. Little head fake pre-market. We're going to take another look at that. So long bonds, as defined by a 10-year bond or a 30-year bond. So you take a look at this. take a list. Upward rise in bonds from June 16th. And yesterday I talked about the big red one. That was a movie, that was a hill, that was a battle in World War II. But it's also very relevant when you're talking about bonds right now, or fixed income, U.S. Treasury securities. Because the big red one is what happened yesterday. So yesterday the markets reversed. 30-year bonds reversed yesterday. 10-year bonds reversed yesterday. It's not to say it's forever, but they reversed. Bonds reversed. So what this means is when bond prices go down, it means rates go up. When bond rates go up, it is like a third order derivative. Oh my God, my uncle told my cousin that my sister was with my nephew and that maybe the economy's not so bad. Maybe things aren't so bad. Maybe we're going to be okay, right? When interest rates fall, usually that means there's trouble. When interest rates go up, maybe it's okay. Maybe the economy can handle it. So I'm not there yet. It's one day. It's a one-day drop. And of course, today's the second day, confirming it. Take a look at the TNA. The TNA is a triple. It's a triple bet. And you see the kinds of moves you have here. Up and from 43 and change to 41 and change. 5% move in minutes. Back up, that's a 41 and change to 44 and change. That's a 7.5% move in minutes. Down and up. And so you've got a very volatile, very kind of crazy set of movements in the 3 times small cap share market. I think what we're going to find, and I'm going to go back to the inside baseball for a minute, is the variance of the S&P 500 should always be significantly lower than the variance of the overall market. It is efficient. It is a capitalization weighted index that invests in stocks, the S&P 500, invests in stocks, and it invests based on the market cap. So it's really a move of the whole market. And when you do a capitalization weighted, it should always be better than if you do equal weighted, which is what our model does. Now, if you compare it to the dog shit money losing stocks, of course it looks better. But when you compare it against stocks that make money, you find a different story. Compared to the stocks that make money, that variance is 1.9 times 10 to the negative 4. And this is 1.65 times 10 to the negative 4. It's not that much better. And so that edge that the S&P 500 has over the overall market is reducing. I think it's because people are making plays with the S&P 500. That it's becoming a playground during the summer when there's less liquidity. Markets are going to correct back when people basically come back to work. Right? September, October, you're going to see real things. But for right now, let's take a look. Let's go with this concept that says I expect a 10% return in the stock market. Can you say it? I expect 10% return inclusive of dividends. So dividends last year ran about 1.3 on the S&P. So now we're talking an 8.7% return on the stock market. I sure hope so. So if we look at that, then our model says to invest in Silvergate, and Coinbase, and Mercado Libre, if you can only buy one stock. NVIDIA, SI Time, right? The semiconductors, Blackstone, Carlyle Group, Ares Management, so KKR, so 4 money managers or private equity firms, a slew of semiconductor companies, plus software and services in the new economy, plus Bitcoin. I almost want to play AC/DC Back in Black, right? So let's see. So what happened? So Nancy Pelosi, it's so funny because I was so disappointed originally in Nancy Pelosi going to Taiwan. And I thought, what's going on? Why is she going to Taiwan, right? Like, what's up? And then I realized she is representing our foreign policy better than our president. She says the U.S. won't abandon Taiwan. Now, I had read that there was some intelligence briefings made. Those intelligence briefings indicated that China was going to be invading Taiwan, physically invading in the September-October timeframe. First off, it's a good time weather-wise. And that China had somehow gotten the message from Ukraine, our actions in Ukraine, that maybe we wouldn't stand up for Taiwan. Now, Nancy Pelosi says, you know what? I don't care. They can shoot me down. I'm going. The U.S. will not abandon Taiwan. Now, if you're going to do a maritime and aerial blockade, China, then we are going to make sure that we support it. Now, Nancy Pelosi is 82 years old. She's not a young woman. She has very little to prove. And she's acting quite presidential in this case. Pelosi reiterates ironclad support for Taiwan's democracy. Look at her. She looks very nice. She's representing the U.S. in a way like a Margaret Thatcher would. There's nothing wrong with that. I love it. I'm going to like it. And I'm going to do my tag phrase for her. Go, Nancy, go. With a big heart. Because we need to support Taiwan. That's the point, right? And so that makes me feel a little optimistic. You know? Now, Russia, of course, comes out and says that we're not doing the right thing. But I think we are. I think this is good news for America. What else could be news for America? Let's take a look at the stock market. So first off, I love FinViz. Something else I noticed is that the new low to new high ratio, which was like 30 to 1 and 20 to 1 and 10 to 1, was showing horrific market breadth. Now, this is a market that was down yesterday. 71 new highs, 103 new lows. Market breadth is swinging positive. Now, you know I like to look at fixed income. I'm a believer in fixed income. For corporate bonds yesterday, and this is at a time when interest rates went up, which means bonds go down. The value of bonds go down. So interest rates go up, bonds go down. If you have a 401k or a money market fund or some kind of fund that invests in bonds, the fund goes down when interest rates go up. But surprisingly so, it's less than 2 to 1 new low to new high ratio. Take a look though, advancers 2,600, decliners 6,600. So in a day when it's about 2.5 to 1 decliners to advancers, it's less than 2 to 1 new lows to new highs. So market breadth is turning positive. I know it doesn't feel that way. It feels like crap out there. If you're like me, I'm losing my ass in the market. But it could turn around. It may already be turning around. And so if we look at, I do like the Cohen, nice first page here. And interesting, right? So real estate did badly yesterday. And that makes sense. Like if the market's going up, then real estate goes down. Financials go down when interest rates go up. I guess that's right. I guess banks don't do as well when interest rates go up. It's just a very interesting time. India's market's up for the first time in months that I've seen. And when I look at this, and I look at just, I don't usually look at the Dow, but I look at S&P, NASDAQ, and Russell, and I'll go, let's say, 1 month. 1 month, market's looking up. We may have already missed it. For 3 months, we're flat, so you didn't miss anything for 3 months. 5 days, we're up. So if you believe the market will deliver you a 10% return inclusive of dividends, you got to be all in on the high beta stocks. It's unbelievable. I'm actually nervous. Oh, look at that. Bitcoin's up. Somebody knew I was going to make this video. So they bid up the price of Bitcoins. We're up to 23,400. Remember what I had said about Bitcoin is we were at a baseline there of 40,000 and then 30,000 and then 20,000. And I actually bet somebody $1 that Bitcoin would see 10,000 before 30,000. I might have to pay up that dollar. It's family, so the dollar is going to mean a lot more than just $1. I'm going to zoom in on this. I want you to see the chart because, first off, I'm not a big crypto guy. I'm not sure I understand it. It feels weird to me. It's like unregulated currency, and honestly, I got enough trouble keeping regulated currencies in my wallet, much less unregulated currencies. I used to have an unregulated currency. I used to go to the roller rink when I was a kid, and there would be a little token. You can use it in the video games. And it said no cash value. But you paid and you got like 6 for $1, and then you can play video games that normally cost a quarter. So you felt like you were getting a good deal because you were buying a quarter and you were paying like 16.66 cents for it. Now what I should have done, but I wasn't smart in those years, right, is I should have bought up a whole bunch of the fake coins and then sold them to kids for 20 cents. Oh, hey, you want 5 games for $1, right? You're making out like a bandit. It's like a free game. Right? And I'd be making 25%, but the reality is I ended up with a couple of those coins after I stopped going to the roller rink, and so I think my profit was left in my drawer. I think I still have them in my bowling ball bag. Talk about old stuff here. So if we take a look, mid-June is when the market would have changed. Right? Mid-June, Bitcoin hit about 18,000. And then it pops to 21. Then it goes to 19.3. Pops to 22. It closes at 19.6. So lower, higher lows, higher highs. 23.7. And then it closes down at 2,900. And then 24,000. So again, Bitcoin seems to be having a recovery. And so the stocks that are model picks, Bitcoin, semiconductors, asset managers. This is crazy talk. If you know me how bullish or how bearish I've been, this is crazy talk. And so let's see what else we have here. There's got to be some other factors, right? Well, first off, the S&P's up. I call this a bear market rally, but it's a pretty nice rally. What are we up? From 36.50 to 41.12. That's not bad. That's like 15%. NASDAQ, like 11,250 to 12 to 13,000. That's like 20%. Russell, forget about it. 1650 to 1900. That's over 20%. So even the Nikkei is rallying. Nikkei is rallying, guys. So mid-June. So the thing that I was following mid-June, the thing that really meant a lot to me, it's not the VIX. I don't really care about the VIX. The VIX is declining, though, indicating that the smart money isn't worried. It's not worried. Look at that. I wasn't even going to look at this for you. I thought you didn't need to see it. Look at that VIX recovery. Recovery meaning going down. It was like 34 in mid-June, and instead of the market crashing, the market recovered. So interesting. Market recovered from 33 to 24. 24.20. Bonds from 132, and I thought maybe it would hit 130, which would be, this is the end, and it didn't. It hit 145. Now maybe it's down a little bit today, but I gotta tell you, this is crazy talk. It could, 2 days down, it could be the start of a downtrend, but it also could just be a little fatigue. So, all right, let's see. Is anyone out there? Say hi, ask a question. I am running out of steam. I don't have anything else to tell you today. Maybe the only other thing, let's look at some of the commodities. There's certain commodities that are sensitive to the market, and we talked about it yesterday. Copper. Copper moves with the market. Copper is an economically sensitive commodity, and that has recovered from 320 to 350. It's 10% recovery since mid-July. Since mid-June, it kept falling from $4 down to 320, back to 350. Silver, $20. Silver is economically sensitive. Now gold goes the other way. So gold's interesting. Gold moves against the market slightly. So this one, it's hard to tell, but it looks like it's coming back to about 1800. Oil and gas is very much moves with the market. And so the fact that crude oil is at 96 and gasoline is back to 313, this actually ties in with a bullish stock market. And so it could actually be that the dollar's weakening. Oh, look, dollar's weakening a little bit, tiny bit. But the dollar coming down from 108 and change to 106, that's a 1% weakening of the dollar. That's really good for earnings of U.S. multinationals. It also drives up crude oil prices by a percent. Now, crude oil prices have dropped from like 120 to 94, pop up a percent. You could see crude oil, if the dollar continues dropping, you could see crude oil going up. So what's moving today? Jeff, any stocks we should be looking at today? If the market's going haywire and we're all back in black, talk to me, Jeff. Where are we? We going anywhere? And go, Nancy, go. We may have a new presidential candidate. Honestly, I can't believe it. I'm shaking my head. I thought Nancy was all hat and no cowboy, but she risked her own life to show our support of Taiwan. So I did make $93 yesterday in our portfolio. It's terrific. Let's get away from that. But these are the stocks that the model said could be hot. Could be hot today. And we looked pre-market, and in fact, it's a mix, down and up. So it looks like the smart money isn't sure that there's a 10% return on stocks. That's good for you and me. Because if this was going to get blown out, it would be blown out in a couple of days, and your chance would be gone. And so I also added in here Gartner. Gartner flew to the moon yesterday. And you should do due diligence on Gartner. I saw something in Gartner. IT is the ticker sign. You should do due diligence. Gartner, IT. I can't tell you which way to do the due diligence. You got to do your own homework, because I might be wrong. But I want you to think about Gartner for a minute. Okay. Let's look. Walking Wounded. What are the stocks that have not been doing very well? And most of those stocks are recovering. So the Walking Wounded look great. Now, EJH, I've been joking around about EJH for like 3 days now. EJH is eHome Household Service Holdings. It got pulled into our model, I think because it listed in the U.S. maybe just a little more than a year ago, and it finally passed data validation, so it showed up. We've now pulled it out of our run. But they offer household services, and they offer pharmaceutical distributorship of Chinese herbal medicines, Chinese traditional medicines, and pharmacological level medicines that are made by this one lady's company that they bought. This one lady's company. And so, tiny company, they make drugs and they sell them. But the best part is, when I looked in their financials, EJH offers sister-in-law services, and no one can tell me what a sister-in-law service is. And I finally Google searched it. Do you know there's like 10 different names for sister-in-law in Chinese and Mandarin? Depends on the age of the sister, the age of the wife, the age of the husband. So like you have wife and husband, then you have the sister. Is she older or younger? It's crazy. There's so many sister-in-laws. I don't even know. So I don't know why they're in here, but it's crazy. But like Haynes is recovering, Hewlett Packard, Warner Brothers, Freeport McMoran. I guess because copper had that little kick, that little boost up. Even Verizon looking a little strong pre-market. I mean, you don't see that. So maybe something's going on here. Let's look at specialty retail. Oh boy. Cannabis-related specialty retail, Hydrofarm Holdings, that helps the home grow industry. It's down 26% pre-market. But I'm going to take a wild guess here. No. Okay. No, that's very interesting. So, like Wayfair and American Eagle Outfitters and Party City is up. The pot ones are down. Something must have happened in the cannabis sector. I love the cannabis sector. It's a big fat negative, though. Even Corbis is down. Oh, Corbis, you must save me. We have a big position in Corbis Pharmaceutical. Do you know if Corbis were to ever run, I could buy a Lamborghini? That's how much I own. I could finally get the bumper fixed on my 2012 Scion XB. The bumper cracked because I hit an iceberg. Can't afford to get it fixed until Corbis goes up. I told myself that. But Corbis goes up, I'm getting the bumper fixed. I actually sold the other car instead of fixing it. I'll probably end up selling this one too with the profits of Corbis, but whatever. Oh, let's look at Morgan Stanley. It's funny, the large money managers are all up pre-market, but APAM is down. What do people know? What do people know? What does the smart money know here? What the smart money knows is that, let's look at the inefficient stocks. This is before we changed the model. There's a lot of negative there, but a lot of positive. Ergo, they're the ones that want to put a medical device in your head. It's going to talk to your ear, and it's going to translate what your ear hears to your brain. It's up 100% pre-market. Ergo is the most ridiculous 10Q we've read, and the most ridiculous business model. But it's running this morning. It's running in pre-market. Ergo is in play. Ergo is in play. All right, well, we got to tweet that one out. Oh my God, all of our followers are not going to know that Ergo, which is just total garbage, is in play. This is what I do all day. Ergo is in play. Pre-market up 100%. You got to make the goo-goo eyes now. Without the goo-goo eyes, nobody looks, right? You got to have those. These are the things you learn about in Twitter. Got to make the goo-goo eyes. All right, what else am I noticing? You saw it here first. I hope you tell all your friends that, Chicago Quantum told us that Ergo is in play, and that we better get Johnny on the stick on that one. Yeah, pre-market computers is up. Now, computers could be a back to school trade. It's just like Main Street trade. Chips and semiconductors, a little mixed. That's a good sign for a model. It says no one's noticed yet. Although more ups than downs. Maybe a few people noticed. Coal. How's coal doing? Coal's up. That's interesting. I wasn't expecting coal to be up, to be honest. Regional banks. 3 regional banks are down pre-market, 3 down, and a bunch up. By the way, Carver, CARV, and BYFC, Broadway Financial, are both banks that are in trouble, money losing or bailout. BYFC got a $150 million preferred C purchased by the U.S. Treasury under like an emergency bank bailout program. So there are banks that are being bailed out right now. And the 2 that are in the worst shape have gone up the most. And so this could be where people are just buying asymmetric, risky crap. And they're going to make a go of it today. And maybe this is where the money's at today. So I want to thank you for listening. If you're still out there, it shows we still got a few viewers. Go ahead and ask a question if you got one. Because I'm gonna wrap up. We pop out the chat. Yeah, no one's asked anything. That's okay though. Just to wrap it up. So we are not paid to make the videos. So if you like the videos, hit the subscribe button. It really helps us. Maybe even share a note on Twitter, Facebook, LinkedIn. We do post under Chicago Quantum or under Jeffrey Cohen. So you can share a link. Or just share the channel. Let them know we're out there and that you like the videos. Drop a comment. We like that too. Get a little engagement. That helps YouTube to share our videos with others so that you share the message. We don't advertise the videos or anything. We just post them on our social media once a day. Sometimes we make a blog post. So thanks again for watching. Good luck in the markets today. It is amazing what a small change in your model from 5% to 10% expected return inclusive of dividends next year does to the stocks it picks. It changes everything. Bye-bye.